We're in this Nasdaq position. We're looking at 1 minute chart right now. Same strategy, Alligator and AO or Awesome Oscillator. First, I go to 5 minutes time frame. My eyes are on this high, the yellow line. As you can see, we do have divergence in the Awesome Oscillator. AO made a new higher low. On the other hand, price made higher high. It's obvious and evident in the market. We also have another divergence in here. Same divergence also appears in the 1 minute chart. I show you guys. Looking at the bigger picture, price made a new high. AO did not actually made a new higher low. That being said, we have waited for the price to go below the alligator lines, and on the way back up, I marked this up close candle and the green line. That is the range I like to get in. Now I move the stop slightly lower. I can add one more to my sell position. Obviously, I don't have enough margin. Yes, I don't have enough margin. And as for the target, looking at the lows, we have one equal lows here. Second target is here where I left my stop. We have $465 at risk. At first, it was $585, and now I can reduce it to $395. If I leave the stop profit here, that would be $705. It's decent. The risk to reward with the current condition, let's make it 1 to 2 and see how the price reacts to these levels. We can always change the profit levels. All right, let's go to this trade. I mentioned 5 minutes time frame. We have a high. The price came short. How do I know it came short? Because we faced a sell-off. The sell-off is continuing. Same method as I traded last time. This playbook is when the price comes short to a significant resistance level. In this case, that's 808.75 cents. The price is completely below the alligator lines. The downtrend should resume. If I had more margin, I would add one more contract, but currently we don't have that. The 29,735.75, that's an easy target. The yellow line, the second target could be the runner, followed by 29,700. These are legitimate targets. Let's see how this trade would play out. I can move the stop above the green line of the alligator and reduce the risk. That's $260 at risk now. The reward will be around $780. Currently, our risk to reward is even better, 289% of the risk. I will monitor how fast the price would react to the alligator. If I see the price is respecting the green or the blue or the red line respectively, I will even move the profit slightly lower. So this portion is important. We are having that reaction where I expected. So right now I am moving the profit slightly lower. That's a very good reaction to the price. The reward right now will be 550% of our risk, moving the profit level to $29,718, making $1,000, while we only have $200 at risk. I will also monitor the price in this area, 29,735. If I see big bounce and lots of tails, I might close it without considering the price to hit the target or move the stop to break even or even lower. Because these equal lows in here, they are very fragile. We see a ton of tails. The liquidity in this area is thin. Let's wait and see. Looking at the AO, no divergence. AO made a new low. So does the price. The current trend is healthy. It is natural for the price to have a tail after tapping below 29,735, only because, of course, there are stops here And once those stops are triggered, it is natural for AO to have a little bounce. It is very important for you guys to make sure you stay calm and confident about your trade and about your strategy the whole time. We have to let the winners run. Only in this case, we can build a green statement over time. Looking at this tail, this is price action. If the price closes below 50% of this tail, the downtrend will likely continue. But if it doesn't and start bouncing up, I have to manage my trade by moving the stop to break even or exit with a smaller profit. So it did close. This is price action. You will learn this in another trading course, which is support and resistance or bull and bear trap strategies. All right, now we are looking at another easy move to 29,718. It's time to move the stop to break even, securing only $85. Make sure you manage your margin the way you can. Exit partially at these lows. Unfortunately, I don't have enough margin to enter 2 contracts. I should have traded Nasdaq Micro, where it requires much less margin, but I entered on Nasdaq. This is something I should consider in the next trade. This candle completely closed below 29,735. I can remove that. This support area is no longer valid. It's invalidated. Now we are in discovery mode toward the next liquidity zone. AO is completely healthy. Price made a new low. So did the AO. This is Bill Williams' strategy. This strategy by Bill Williams, it was designed to trade stocks, but we can use it on any currency pairs, indices, even cryptocurrencies. The price tapped into the green line, immediate bounce. This is a very good sign. Sometimes if you guys are hesitating to target the exact lows, you can always target the close of the candles or the settlement price. That's less risky. But since I only have 1 contract, I should keep this trade on. And since it is education, we don't want to remove the take profit or stop level. That's trading psychology, especially once you set your stop loss. Do not move it. You can move it closer to your entry, but do not move it away from your entry. That would result in a bigger loss. If we are wrong, then we are wrong. It's better to exit a trade with a small loss rather than a bigger one. And if the price returns back to your position direction, that's okay. You can always re-enter the position, but try your best to keep your stop and your profit at the level you have set. Don't let emotions to get involved in your trades. Now, for this case, I have the green line, which is the lip, and this high. So I can secure more $350 on this trade, almost to our profit. Here we can become more aggressive, move the stop even lower. Well, we didn't get there, and the trade is closed at 29,718 with success. Thank you for watching. I will see you in the next episode of Advanced Bill Williams Strategy.